MSCI index changes set to come into effect today. HDFC Bank trades higher on expectations of inflows in excess of over $1 billion as MSCI raises the foreign inclusion factor.
Max Estates corrects after it launches a QIP to raise 800 crore rupees, while Prestige Estates, on the other hand, rallies on a QIP fundraise worth 5,000 crore rupees.
Sugar stocks are surging as the government lifts curbs on ethanol production from cane juice, B-heavy molasses and C-heavy molasses for the 2024-25 sugar season.
Vodafone Idea trades slightly under pressure ahead of its curative petition hearing in the Supreme Court over its AGR dues that are scheduled later today.
And SpiceJet is under pressure after the DGCA puts the airline under enhanced surveillance after an engineering audit reveals deficiencies. 150 cabin crew staff have also been placed on furlough as the airline copes with a lean travel season and a reduced fleet size.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me for the entire of the week is Hormoz Fatakia. Hormoz, well, a good start to the series, September series. Things looking good. I think the big cue later today will be the MSCI rejig. Last few days, we have seen the mid-cap index do a relative underperformance. And today as well, we have a bit of a bounce back that we're seeing in the mid-cap space. So let's see how it ends.
Mid-caps have been an underperformer, right? But the Nifty has been, it's been all about the large caps all through this week, right? 11 days of gains, now into the 12th day for the index. 25,230 is where we are. We made a high of close to 25,260 earlier in the day. The 25,285 is the level that I am watching out for, and that's because if we get there, we'll be 4,000 points from the lows of the budget in just a month. So that is the kind of recovery that we've seen on the index, but of course, plenty of corporate conversations lined up as well.
Well, that's right. Let's get straight to the first corporate then. GPT Infra, the company recently raised close to 175 crore rupees by the QIP route. To understand what are the plans, what's the way ahead, how will it be used? Well, we're joined by Mr. Atul Tantia, the ED and the CFO of the company. Hi, Atul. Good morning. Good to see you win. Well, there's been a lot of interest in the stock, and now you've gone ahead and you've raised money by the QIP. 175 crores is what you've raised. You've said it'll be used to pay down the debt. So give us a couple of numbers. The rough interest per annum is around 30 crore rupees. What was the debt? What does it come down to? What does it mean in terms of interest savings?
Sure. Thank you. So the debt currently on the balance sheet is about 190 crores. The interest number includes the finance cost in terms of the bank guarantees, which is typically the high number for us. And so this reduction of debt will reduce the finance cost by almost 15 crores, which is almost 50% of what we had spent last year. This will directly flow to the PBT and help us in reporting better numbers in terms of the PAT.
Okay, and the debt that you said was 190 crores, it comes down to what?
It comes down to about 50 crores.
50 crores, got it. Just one more question. The promoter holding, as I see last reported, is around 75%. So the promoter holding will come down a little bit, but also it appears that part of the shares of the promoter holding is pledged or it's encumbered. Could you clarify on that?
Sure. So the part of the promoter holding is pledged to the working capital bankers of the company, which is led by SBI. This is towards the working capital limits of the company, and it is not for any other reason that it is pledged. This, as with the QIP route, as the debt pays down, this, as per the discussion with the bankers, this will also get reduced.
So by the end of this fiscal year, should we see the promoter pledge free, or say it's a story of FY26 when, because from a share market perspective, you don't want the promoters holding to be pledged. So is there a plan to make it pledge free? If yes, by when?
There is a plan to make it pledge free. I think by end of FY25, we should see part of the pledge getting released, and FY26, we should see it fully getting released.
Right, you're getting fully releasing promoter pledges by FY26 is what you're saying, Atul, if I'm getting that correct, right?
Correct.
Right. So getting to the business aspect of things now, Atul, I wanted to talk to you about your order book currently at around 3660 crore, if I'm correct. Could you share a breakup of that? How much have you received in terms of order inflow so far in FY25, and what's the pipeline looking like?
Sure. So in terms of FY25, we received about 825 crores of new orders. This includes a large contract from RVNL for construction of the elevated corridor over the Kona Expressway in Calcutta. We do multiple bridge contracts for NHAI, RVNL, railways, and the likes. in terms of the order pipeline is quite strong, and we are continuously bidding for new contracts. With the infusion of funds via the QIP route, our net worth will improve and we'll be eligible to bid for much larger contracts. And that is the plan going ahead as well.
What will be the change in the size of the contracts, if you could quantify that, and also if you could tell us what is the what are the projects that you are L1 on currently as well?
So in terms of our current eligibility, we are able to bid for contracts up to 1,000 crores in our own name. The largest contract that we have in our order book is about 820 crores from NHAI for construction of bridge over Ganga and Prayagraj. With this infusion of funds via the QIP route, we'll be eligible to bid for much larger contracts, about 1,200, 1,300 crores as such. L1 status, we normally don't declare, we declare as and when it is disclosed by the clients. So we will disclose that going forward when we come to it.
All right, Atul, I understand that you're guiding for a revenue growth of 20-25% for this year, but the start has been soft. In the first quarter, you grew only by around 2.5%. Do you stick to that guidance number? And also give us a sense on the breakup. You know, the infrastructure mix currently is around 93% of the mix. How do you see this mix evolving in the time to come?
Sure. So the current quarter, you have to be, the first quarter of this financial year, you have to be mindful, was an election quarter. With the elections, especially the migrant workers tend to go back to their native villages to vote, etc. So that leads to some disruptions. That is why the first quarter was slightly muted. We continue to hold on to our guidance of growing by almost 25% for this financial year. Rather, I should say for the next 3 financial years from till FY27 at least. And that is the number that we are quite confident of achieving as well. In terms of the segment revenues, 93% last year was the infrastructure business and 7% was the manufacturing of concrete sleepers. We expect that to be around 88 to 90% to be infrastructure and 10 to 12% to be the concrete sleeper business.
And by when would that happen, Atul?
So this financial year itself, we will see the concrete sleeper business picking up as well. So this financial year, we expect concrete sleeper to be around 10 to 12% and infrastructure to be 88 to 90%.
And what about the margins in the railway sleepers business? I'm assuming you enjoy higher margins in that business, right?
So the Indian business for railway concrete sleepers enjoys a similar margin of about 13%, which the infrastructure business enjoys. The international business is at a slightly higher margin. So on a blended basis, we would say that the margin in the concrete sleeper business is about 14 to 14.5% compared to 13% for the infrastructure business in India.
Got it. So a blended margin I missed for the year. What are you guiding for?
Pardon?
Blended margin for the year. What are you guiding?
Okay, so blended margin, we have been always sticking to a hurdle rate of EBITDA of 13%. And we are guiding for a 13% EBITDA margin on a blended basis for the full financial year. That is a number that we are comfortable with. And that is a number that we have achieved over the last decade as well. So that is what we are guiding going ahead as well.
Okay. The other aspect is, you know, it's good to see you're generating operating cash flows as well of more than 100 crores on a per annum basis. So that's good. Your working capital days have been gradually coming down. You know, a few years ago, I think it was around 180 odd. That's come down to, I think, 105. Where does that number stabilize at?
So we expect working capital days to be around 90 to 100 days. It's a healthy number given the kind of contracts that we do, especially bridges contracts, which have milestone-based payments. And that is the number that we would be comfortable with. We should be able to achieve that in the next couple of quarters.
Give us a sense of your international business, Atul, especially Africa. What percentage of your order book comes from the continent? And there were some reports of some disruptions in Ghana as well. How are things shaping up on ground over there? And what is the kind of growth that you're expecting from the international business?
So in terms of the order book, about close to 175 crores, which is about 5 to 7% comes from the international business. We have 3 factories in Africa, one in South Africa, another in Namibia, and the last one in Ghana. These are for the manufacture of railway concrete sleepers in those respective geographies. They do supply to the local railways there. We are catering to a large market there. The market is very, very, I would say small compared to what it is in India, but it is a higher margin business for us. In terms of the political stability in Ghana, it's quite stable. It had faced its own issues with respect to IMF default, but that is something that is that they have kind of resolved. Our project is funded through the European International Bank, so we don't see any challenge with that.
Okay. All right. Atul, we appreciate you joining in. We're going to hold you to these numbers. Post the QIP, interest cost comes down by 50%. You're confident of growing by 20-25% for this year. Working capital days comes down and margins hold steady at around 13%. I appreciate you joining in and giving us all of those details. For the time being, though, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda De of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu, take it away.
We are talking about RateGain Travel Technologies, the travel-focused SaaS or software as a service player that had a softer start to the current fiscal. In the first quarter of FY25, while overall revenue grew by 21% year-on-year, the performance of the distribution business was sluggish, marked by several one-offs. However, data as a service, which is DaaS, and the digital marketing business, which is MarTech, had put up a strong show. The company nevertheless managed a decent operating margin and is confident of maintaining the full-year guidance riding on a strong order book. RateGain has raised 600 crore capital and has enough resources to pursue inorganic opportunities. This remains a key watch given RateGain's success in turning around acquisitions. The current soft patch might just be the right opportunity to add the stock for the long term.
Okay, Madhu, thanks a lot for that. Well, on that note, though, we'll slip into a short break. On the other side, we'll have Jal Irani of Nuvama Institutional Equities, who will be joining you with the key takeaways from Reliance AGM. Stay with us.
Back with us here on Chartbusters, continuing with our coverage from the Reliance Industries AGM on Thursday. Now, Jal Irani, the Executive Director at Nuvama Institutional Equities, is joining in to discuss the key takeaways from that. Jal, good morning. Thank you so much for joining in. What do you make of the slew of announcements that were made yesterday by Mukesh Ambani when it comes to new energy or the O2C business, the prospects that they've laid out for the new energy business? What do you make of those announcements?
So I think the market has been seeking clarity, especially on the new energy business, and certainly this AGM provided a good direction towards that. I think the most important statement that the chairman made is that the new energy business within 5 to 7 years could become as large and equal in terms of profitability to the O2C business, which is the cash cow oil to chemicals business, the refinery and petrochemicals business. Now, the magnitude of this is immense because this is the largest profit bucket on a attributable consolidated profit after tax. The O2C business contributes more than 50% of its bottom line. So if Reliance is going to replicate this within the next 5 to 7 years, not only is it going to be immense in terms of profits, but notably this business is also green and clean. So therefore, unlike petrochemicals and refining, which arguably gets not a fair or not a valuation as high as some of the other businesses, this shall get a valuation which will be significantly higher. Besides, also, notably, the new energy business is actually significantly linked to especially the O2C business, and will, as a result, the entire company will be net carbon neutral by 2035. So even their existing O2C business, which is the largest profit, will turn green, and there'll be a valuation re-rating there as well. So by far, I think this was the most significant announcement.
All right. Hi, Jal. Good morning and good to see you in. Nigel on this side. So you have spelled out, what impressed you and the way ahead as well. But can you quantify some of that? How do you see the business evolving? If you had to put a couple of numbers, what is it currently? And how do you see it evolve in the next 3-4 years on various verticals? That'll be helpful.
See, essentially, the chairman has quantified it for you. So that's actually the number. But if I mean, it's a new business globally. It's a EV moment to the world, and India has got the opportunity to actually be the Middle East in this business, one of the lowest cost and one of the largest in the world. And the way I look at it is Reliance is actually strategizing very wisely to be the Tesla of this industry. And this is something that they have over the last 5 to 6 years, very significantly put the pillars and building blocks in place. They bought out about a dozen leading technologies and key players across the world. And that is beginning to actually now translate into actual capacities. The first, which the chairman specifically said, is going to be the 10 gigawatt PV module facility starting by the end of this year. Now, for that itself, they had bought out a company called REC, which is a leading technology company in the space in the world. And Reliance will be commissioning the HJT technology, which even the Chinese are barely beginning to roll out. And a small portion of the Chinese are beginning to roll out. So Reliance will be cutting edge technology. And to put 10 gigawatts into perspective, while India's current module capacity is about 50 gigawatts, production is only about half of that. And this 10 gigawatt, when it's get commissioned in true Reliance style, they will ramp up very quickly to full utilization. And not only that, the efficiency of these modules will be amongst the highest in the world at 26%. The efficiency of most modules at the moment is 20% or potentially even less. So therefore, by far, so this is the first thing one can expect. And shortly after that, they'll be commissioning multi-gigawatt size electrolyzers, which will be using the solar power energy that they produce to convert into green hydrogen, and simultaneously setting up 30 gigawatts of battery facilities all this is by next year and the years that follows, 25 and 26. Now, 30 gigawatts is completely off the graph. It is all this is very essential to provide round-the-clock power. So not only the cost is going to be very significantly lower, but also they'll get round-the-clock power. And as the chairman actually highlighted, they've also got the land and the port facilities to become an exporter of green ammonia eventually. So that land being a very critical part, which has also been allocated, including the Deen Dayal land port facility for exports, basically. So these are some of the broad timelines that one would be looking at in the space.
Jal, there were some targets that were laid out for both Jio and for the retail business for doubling their revenue and EBITDA over the next 3 to 4 years. Do you see that as achievable considering the way both the businesses are growing and at the pace at which they are growing, or do you see that happening much before the 3 to 4 year timeline that has been set out?
Well, essentially, these businesses are no longer in the early stage anymore. Investments are in place, and now they're in a phase of operational leverage. So essentially, what happens with every unit of volume increase, you get a margin increase as well, because your fixed costs are not going to increase at the same pace. So therefore, the profit growth is potentially going to be higher than top line growth, and top line itself is growing significantly into double digits, mid-teens at least. And with for example, in Jio itself, the tariff hike which has been taken at the moment significantly flows through to the bottom line. So they should achieve fairly strong growth in those areas as well.
All right, Jal, we leave it at that. Thank you so much for joining in and sharing with us your thoughts on the Reliance Industries AGM and the targets that the company has laid out going forward. Jal Irani there of Nuvama Institutional Equities. Incidentally, Nuvama has also laid out its highest price target on the street for Reliance Industries, which is at 37.86. The stock currently 0.5% low, but continues to remain above the mark of 3,000. Take a short break. Back with more on the markets and specific stocks on the other side. Stay tuned. Back with us here on Chartbusters. The Nifty remains around the mark of 25,220, but the bigger takeaway is that it is in the green and in the green for the 12th straight day. And one stock that may ensure that it remains in the green for the 12th straight day is HDFC Bank, and that is likely to see inflows today worth up to $2 billion, considering the MSCI adjustments that will take place towards the closing of the trading session. Currently 0.5% higher at 1650. It has done precious little since the MSCI announcements were made. The stock has been absolutely flat since the 13th of August, since from the day the announcements were made. But the stock that is doing well today, though, is RVNL, and that is the stock that is also an MSCI inclusion and is likely to see inflows of anywhere around 200 to 220 million as well. At the highest point of the day, 3% higher. It has also signed an MOU with Patel Engineering for some construction work. So closing in on 600 is RVNL, and also pull up Dixon Technologies. That is another stock that is likely to receive some inflows courtesy the inclusion in the MSCI indices. Currently 0.8% higher, slightly off the highs of the day, but above the mark of 13,000. And lastly, the Nifty Pharma index is what I wanted to highlight. The top sectoral gainer in today's session, comfortably with gains of over 1%. At the highest point of the day is Nifty Pharma. Also in the green is the Nifty Realty Index. But with that, it's a wrap on this edition of Chartbusters from Nigel, me and the team that put this show together. Thank you so much for watching. Trading Hour takes the action forward.